I do. I actually have a chart on my Twitter account explaining that I believe that October, right before the U.S. presidential election, will probably have a powerful leg up for both gold and silver. And most likely, silver will test $40 and gold will test 2800.
Seems undeniable, Eric. It just
Yes.
doesn't seem like there's really nothing to alter what you just said. So, especially considering that gold was made a tier one asset globally, was it back in 2020, 2019?
2019.
Yeah.
2019, yes.
It's the only other tier one asset now out there, and it's probably for this very reason. So aside from its usage within the BRICS countries' transactions, do you see gold playing a larger role on the global financial stage in the years to come? And what does that mean for gold supply and prices? So I'm trying to incorporate in this question the G7, the Western nations, et cetera, not just the BRICS, everybody.
I think the G7, will have to continue buy products from the BRICS Plus. They might sanction this country, Russia, maybe that country here and there, but they will still need to import, and they might manufacture their own products, right? I mean, Luke talked about that, reshoring. Mm-hmm. But there's still going to be a large amount of things that they need to import, G7. So if you look at it from that perspective, they will need gold, just like the BRICS countries. Because the BRICS countries down the road probably will start, they're already doing it, turn away from the US dollar. They want something that is actual, that is borderless, right? Without being controlled by a single country, the US. And that is physical gold. So that's what I see.
And something that's not being systematically
weaponized,
sanctioned. And the purchasing power loss that they're getting. So they hold these U.S. treasuries for 20, 30 years, and when they get paid back, they're getting paid back in depreciated dollars.
And it can also be confiscated at the push of a button, right? It can be frozen. Look at Russia. Their U.S. dollar assets are all frozen. And I don't know if the U.S. has confiscated Russian assets yet, but I'm pretty sure it's pretty close, right, to confiscation. So gold is the answer to that. You can't, if you keep your own gold in your own country, in your own vault, it's going to be unless the U.S. do to China what they did to Iraq, you're not going to get that gold. It's somewhere, in a bunker, right, in China. There you are.
Yeah, there's zero counterparty risk when it comes to gold.
Exactly.
Yeah. So, Eric, you brought up India. It was reported by CNBC today that India's commerce minister, he rejected the idea of joining the Regional Comprehensive Economic Partnership, the world's largest trade deal, maintaining that it's not in the country's interest to be part of a free trade agreement with China. So what are your thoughts on that, and how does that impact their standing and relationships within the BRICS?
Okay, Gary. Guess how much, in U.S. dollar terms, how much did India imported from China in 2023? It was $121.97 billion in 2023. On the other hand, China only imported $18.54 billion from India in 2023. So we're talking about a 10x, more than 10x, 11x, 11 times difference, right? India imported 11 times more products or commodity or whatever from China versus China. If you look at these numbers, what I can see is it's just all talk. It's like the small dog that barks, right?
Yeah.
It's actually, finance minister, commerce minister?
Yeah.
He's a smart guy. Because that's how you get a better deal at the BRICS. Saying this right before the BRICS meeting, right? I would do the same thing, right? bark a lot, say a lot of things that are, controversial, right? Say things that China will listen to, and then use that to leverage your position at the BRICS meeting. So I think it's all just theatrics, in my opinion.
So
because the trade numbers showed you, right? Like what reality is. Sorry, go ahead.
No, I didn't mean to interrupt. So really nothing more than it's unrealistic because India needs China's manufacturing way more than China needs India. And at the same time, you got the BRICS conference coming up, some important things taking place there. So maybe nothing more than a negotiating ploy.
Exactly. That's why I see.
Okay. All right. So gold and silver, it's traded sideways for so long up until the March breakout. And the miners also, they've been depressed for so long. Sentiment doesn't seem to move higher despite this amazing run by gold this year. I mean, sentiment really is in the toilet, and it really is shocking considering everything going on geopolitically in the macroeconomic scene, politically here in the United States, what's happening with the debt and deficits, what's happening with the purchasing power destruction, and what the Fed is doing. You would think with all of this that sentiment towards gold, silver, and the miners would be skyrocketing, and instead it's literally in the toilet. What's it going to take for confidence to return to the investors of precious metals?
Okay, so let me answer that question. I have been around on Twitter since 2020. And let me tell you, most retail investors in miners, a lot of them, I wouldn't say most of them, but a lot of them bought at the peak in 2021. And come 2022, when gold corrected 20% from around 2000 to 1600, miners, especially the junior miners, a lot of them dropped 70 to 90%. Gary. Okay? I mean, I'm not making this up. Everybody knows. Okay? So you can't blame these guys for having bad sentiment. Because whoever held through that, like that is infernal, my friend. I mean, 70% loss, right? And a lot of these people, they bought only junior miners because they thought it was the sure thing to getting rich back in 2021, right? So I think for sentiment to return, I believe gold needs to break 2,700 US dollars. And silver, especially silver, needs to break 40. And the reason why I say that is because really, if you look at miners, it's most correlated to silver and the gold and silver ratio. Right? I'm not the only one saying that. There are a lot of other people, smart people saying that. And I think $40 should do it. Should wake up a lot of the silver miners. And since they are all correlated, it's also going to accelerate these gold miners going up in value, in prices. Yes. Sorry, Gary. Go ahead.
Are you expecting those thresholds, 2,700 and 40? Are you expecting those thresholds to be hit in this part of the long-term cycle?
I do. I actually have a chart on my Twitter account explaining that I believe that October, right before the U.S. presidential election, will probably have a powerful leg up for both gold and silver. And most likely, silver will test $40 and gold will test 2,800. So that's my anticipation. However, after the election in November, I think there might be a big correction to both gold and silver.
Okay, but not as big as the correction that you think is coming at the end of 2025. Is that correct?
Correct, because liquidity is still going up.
Okay.
The thing that is going to make it correct is, let's say, whoever wins, the banking cartel or the people in control, they're going to drive the narrative saying that that everything is fine now. Everything is fine, and this stability is coming back, right? And when that happens, as you know, gold and silver will probably go back down in price because the fear factor has lessened. You see what I mean? But in the big picture, in the next 12 months, liquidity is still going up. So I believe that after that correction, we're going to recover whatever this loss is going to keep going up into 2025. That's my opinion on that issue.
So Eric, mining, gold and silver mining, it's cyclical. The best answer for low prices has always been low prices, and the best answer for high prices has always been high prices. Low mining prices has been basically, and I hate to say it this way, but in vogue almost exclusively since the 2011 peak. There has been not a lot of money flowing into the sector for more than a decade, yet the world needs gold and silver. What does this lack of investment flow mean for gold and silver miners the longer that this part of the cycle plays out where they're not getting these investment dollars?
It just means that the supply is going to be constrained, and then when it does, like when the miner prices do actually go up, it's going to be explosive. That's what that means. I mean, look at some of these gold and silver miners. There's not that much float. It doesn't take a lot of money for them to just 2x or 5x, right? And what you're describing is the industry or at least investors in the West is simply not investing in these companies for them to do more exploration, which constrains supply, which in return, if the underlying commodity prices go up, it's going to push up the mining prices, right? It's a cycle.
Interesting you put it that way. Rio Tinto there was an article today with the CEO of Rio Tinto. They had just purchased another mining company, and he was cautioning folks to say that just because we made this purchase doesn't mean that it's going to solve the supply issue that we're facing.
Exactly, because there's no money in the sector. I mean, there is money, but not enough for the marginal.
It's the same amount of supply, though, aggregate-wise, right? So just because they took over this company doesn't change the amount of supply that's going to come on over the next 1, 2, 3 years.
Yeah, that's one company, Gary, right? We're talking about marginal supplies. You need higher gold and silver prices for these marginal projects to be economically feasible.
And the higher these prices, the more investment dollars are flowing in, the more supply is going to come online, and then ultimately that greater supply is going to lead to lower prices.
Correct. Eventually, yes.
Eventually.
But we're a long way away from that.
A long way.
I believe. Long way.
No, I'm in agreement.
Yes.
So gold mining company balance sheets are beginning to rapidly improve as gold prices have soared and oil prices have dropped. And in addition, borrowing costs are now set to drop as well. In your analysis, what are you anticipating for the miners as gold stays elevated, oil stays depressed, and borrowing costs are coming down?
They will go up. I mean, it's just a matter of time. I'm heavily invested in miners myself. There you are. So It's just a matter of time, Gary. It's going to go up. Okay. I think we have the perfect recipe right now for higher miner prices. Like you said, energy cost is going down thanks to, not really Biden's handlers, right? And Kamala Harris, pushing down the price of oil, whatever they're doing, right? It's working, right? Containing the energy costs, and you have a higher metals price because of the BRICS, right? Partially, I guess a big part of it. It's a perfect recipe, perfect storm for higher miners' prices, for miners' profits, right? For the senior guys to make profit, right? And it trickles down to the junior, mid-tier and the junior guys. So that's why I see. But yeah.
Yeah. So, Eric, silver's typical big move is a late stage explosive move, and it usually foretells the end of the precious metal cycle. Its move is bigger in that short term time frame, 3, 6, 8 months, than all of gold's move through the cycle. And so, in your analysis, why does silver move so late and so explosively and foretell the end of the cycle?
I think mainly is because silver is so manipulated, the paper silver price. The way it works, in my observation, I listen to people like David Jensen, who you probably know. He's a mining expert. He talks about how the LBMA manipulates the paper silver price. So I believe what is happening is the paper metals cartel, whatever you call it, they have been very successful in managing the prices of precious metals in the last 40 years. Okay? So the way they do that is in the past, is that there is enough marginal gold and silver supplies to satisfy the physical metals buys in the past. But now it's breaking because, like we just discussed, you have China, India, you have the BRICS, you have their citizens all buying gold, right? In terms of silver, we didn't really talk about that just now, but silver, China is really industrial buying. Consumers don't really buy silver. Okay, so Chinese industries are buying silver hand over fist, and so is India, as you probably know already, right? And all this physical, buying is finally, as I was made aware in 2022, flipped the marginal supply and demand matrix. There's more demand than mining supply, starting in 2022, right? So what they got to do, it's just a pressure cooker. What the guys, whoever they are, managing this whole thing got to do is eventually they got to let go and let prices get to a point where there will be more supply for the market need. Okay? We might overshoot in the paper market, right? But let me tell you this. My belief is that $50 is probably not enough for silver. $50 silver is probably not enough for more supplies to come online. Or even for people who own silverware, to sell their silver. It's too cheap. Nobody wants to sell silver at $50 anymore. Because $50 after inflation nowadays is like $50 today is probably like $10 back in 1980, right? Around there, right? So why would you sell your silver at 50?
So maybe more realistic is triple digits.
Probably, I think they probably need 100, around there, at least around there, right? When that happens, a lot of people that me and you both know will tell me and you that silver is going to go to 500. Right. But guess what? What will happen then, right?
Right.
You have everybody leveraging everything at the paper market to try to make money, right? 1 to 10 average. And then at the same time, you will have supplies go online, right? Back into the system. That's when you get a big correction in both gold and silver. So gold corrects maybe 20, 30%. Silver is going to correct 50% in that scenario. What about miners? Miners are going to correct 70% in that scenario.
So you are anticipating this explosive move at the end of the cycle.
Yes.
What's your time frame? Do you have one for when you think that part of the cycle is going to hit?
For the mini cycle or for the long-term cycle for gold
this
and silver?
Explosive late-stage move by silver.
Or for what's happening imminently, right? Like just in the short term, right? Okay. So I expect in the short term, silver, because silver and gold are joined at hip, right? And plus, silver has a lot of supply issues right now, as we just talked about.
Right.
So I believe silver in 2025 is probably going to hit close to 100.
Wow.
I have a chart showing that. But then at that point, if the general market, equity market go into a bust, silver is going to correct 50%.
So it'll come back down
Minimal.
to 50.
It's going to come back 50 or maybe 40. It always overshoots, right?
But that's
or
not
30.
the end of the cycle for you?
No, because they haven't solved the problem, right? There's still a supply and demand imbalance, and 12 months is not going to solve that. It's just a temporary fix, right? And then, and then there will be probably over leverage at near 100, right? That's why you have that paper, you have that paper drawdown, okay? Back to like 50, or maybe like David Hunter always said, right? There might be a bust. Everything blows up in 2025, right? And then you have a liquidity squeeze. In a situation where there's a liquidity squeeze, silver is going to get dumped, right? Historically. So you go back to 40, $50, right? At that stage. So
which would make sense because it's kind of the way a lot of market technicians put it. It returns to the scene of the crime being where it broke through its all-time highs of around 50. So if it went up to 100, corrects by 50% and returns back to around 50, that is where it broke out. So it would make sense for it to return back there.
That's exactly how I see it. I think I warn the people who think silver is going to go straight up to 500 or 200. It's just not realistically going to happen. That's not how markets work.
Right.
Unfortunately, right? So
Eric,
you're
you're a buyer of gold and silver miners. We know that.
Yep.
Tell us, are you planning to hold them all the way until the cycle ends, like the very end of the cycle, 2030, 2032, whatever? Or, are you planning to hold it through this future economic and market downturn, the bust that many people think is coming? Or do you plan to hold up until then and try to time this? What are you doing with gold and silver miners?
So like I said, I think gold and silver, when gold corrects 30%, silver corrects around 50, and miners correct potentially 70%, right? In a downturn, in a correction, major correction. So having said that, I don't anticipate holding all my miners through the downturn or the bust, whatever you call it. But I think the key here is that to your listeners is you just can't be too greedy. If you already own a lot of miners right now, and your stuff 10x, 5x, or whatever, right? You got to be selling a large portion of your miners at key levels. Okay? I keep telling my close followers, I tell them, don't sell too early and don't sell too late. Most people are probably going to sell too early because of what happened in the last 3 years. Okay, gun shy, right? They got burned so badly. Whatever happens after the presidential election, I think a lot of people are going to dump all their miners. That's what I think is going to happen. Okay? But if you hold on to it a little bit longer, or at least hold, some of it, not all of it, a little bit longer, into 2025, that may be your biggest gains right there.
Okay,
but on this,
So 2025, near the end of 2025, correlating with the end of what you see as the Fed rate cutting cycle, you anticipate, there'll be some volatility post-election, but you're going to be holding your gold and silver miners. But around the time where you see the rate cutting cycle coming to an end, will be also a time of great volatility and economic trouble. So at that point, you'll be exiting the miners. You'll see maybe not all of them, but maybe 80% or 90%. You'll scale back. You'll go into, I'm presuming, cash. You'll wait until this thing bottoms. The miners drop 70 to 90%. Silver drops 50. Gold drops 30. And at that point, I'm presuming you'll be a buyer. Do I have that correct?
That's correct. I mean, and you're correct about me not selling all my miners. I'm not going to sell all of it because I don't have a crystal ball. Maybe I'm wrong. If I'm wrong, I missed a parabolic move, right? Of silver to $200. So what I'm going to do, I'm probably going to sell maybe 70% of my miners and hold maybe 30 or maybe 80. I hold 20, like you said, right? And then see what happens. But start selling miners once I see evidence of of FOMO from regular people into gold and silver in 2025.
So yeah, great, wonderful. Well,
Yeah.
this has been a wonderful conversation. Before we wrap up here, and I ask Eric our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Eric as much as I have. Please let him know by hitting the like and subscribe button and leave a comment below the video. It's now time for our Golden Nugget segment. Eric, let's discuss portfolio positioning. Understanding you're not a financial advisor, and based on all we've discussed today and with your experience and your worldview as your backdrop, how are you positioning for the next 12 months? What assets do you like? What assets do you absolutely want to stay away from? And what percentage of your portfolio are you holding or recommending to hold in precious metals?
Okay, so I hold 60% of my 40% of my portfolio is in physical gold. 60% are in miners. That's how I split it. And
so you're 100% in gold, silver, and gold and silver related assets.
And uranium.
And uranium.
In uranium. So I have around 40% physical gold, maybe 10% physical silver, 10% uranium, and the rest gold and silver miners, but mainly silver miners.
Interesting. And how do you break up the miners from major producers to mid-tier producers to juniors? Do you have a certain allocation that you do, like a,
I do.
Okay.
I do. So I have 60 to 70% I own in senior and mid-tier producers, and then around 30% juniors. And I bought those juniors at the bottom in 2023 November. So they bought them dirt cheap.
That's wonderful. Yeah, yes. That's wonderful. Well, Eric, thank you for coming on to the Metals and Miners podcast, for being so generous with your time, your analysis, and ideas. It's been incredible to spend the time with you. Would you please share with the viewers any important message you want to leave with those tuning in, where they could learn more about your work and how they can connect with you?
Okay, so my Twitter account is KingKong9888, and you can, if you log on to Twitter and you go on my account, you see me posting there regularly. And my recommendation to viewers is that you can hold gold and silver for the rest of the decade, I believe, right? Physical. But for miners, you really got to figure out when you're going to start selling. I mean, like I keep saying, don't sell too early and don't sell too late.
Wonderful.
And one final thing. The silver lag is a gift. Okay? Silver lag is a gift. Don't be frustrated by it. I always say that.
Yeah, fantastic. Well, hey, Eric, I look forward to having you back on sometime soon. Thank you for being here with us. It's been fantastic. Everybody else, thank you for watching.
Thank you, Gary. Likewise.
I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.